Good morning, everybody. Welcome to the Flow Show. When is it? I've lost the date. Wednesday, 21st of February today. Getting ready for a huge day, huge news day coming. Big market moving event. Everyone's waiting for the bloody Nvidia earnings to appear. They're more important than the Fed minutes at the moment. Morning, Kay. You got your stock market hat on?
Hey, good morning, Ryan. Good morning, everybody. Well, am I right in that I read that there's about $200 billion of options put on for the Nvidia results? That's I think must be a record, right?
Yeah, well, it's got to be.
Absolutely.
Everything growing exponentially as the value of these companies gets absolutely stupid.
Yeah.
I mean, the amount this can move and revalue the company is the size of some, well, I would say small countries, probably medium-sized countries' GDP.
Yeah.
Ridiculous, absolutely ridiculous. But that's going to be the market move, I think. Probably when we're all tucking into dinner over this side of the water. So
yeah.
I'm sure we'll have to.
I'll watch it with the sunglasses and the popcorn, mate.
Yeah, exactly. While watching the football. Right, let's get stuck into things then. A few bits and pieces going on today. China has held a meeting to apparently accelerate the drafting of law on private economy promotion. No idea what that entails, but it sounds like something else they're doing to try and get things moving over there in China. As you can see from the chart there, the Shanghai Composite it's now posted a good run of gains over the last week or so. So the improvement is still happening. There's still forces at play here, obviously supporting stock markets rising. So it's not seemingly relying on natural demand. It's still propping measures going on here in stock markets, but it's working for now. Not sure it's going to turn around the sentiment, particularly from international investors. But if they want to throw the kitchen sink at it over there in China, they've got a big enough sink to do so. So at the moment, they're keeping things propped up over there. Coming over to Japan, and quite a bit of news out of Japan today. We'll start off looking at the data, some good, some bad. First off, this Tankan index. This is a survey index of some 499, I think, non-financial firms, mainly manufacturers, large manufacturers. It's turned negative, which is the first negative reading since last April. So that's firms getting very pessimistic about the economy. One of the respondents in that survey got noted saying that domestic consumption has weakened since last year. Autos are selling well, but rising prices put a drag on the appetite for consumer demand, particularly for food and daily necessities. So not painting a good picture over there. And we'll touch on that a bit more in a moment because we've had the latest government. Well, I might as well do that first. So the Japanese government have downgraded its view on the economy in its monthly report. This is the first time since November, which is around about the time that they turned positive, I think, if memory serves. They say the economy is recovering moderately, though it appears to be pausing recently. It's also cut its view on consumer spending for the first time since February 2022. That's far more worrying. Also saying that the recovery is pausing. So that's the consumer spending forecast or outlook getting cut, as noted in that comment on the Tankan. It's also downgraded its assessment on industrial production. This is the first time since March last year, although they say that industrial production has been hurt by the suspension of some auto production and shipments. That's the Toyota mess that was going on over there. So overall for that side of things, on the economic side of things, pessimism in non-financials and manufacturers. We've got the government now cutting its outlook for the economy. That's one big pillar for the BOJ that's turning a bit negative. And it might explain why we've had these government finance ministers coming up and jawboning the economy, jawboning the FX rate, because this is all part of one of the big ingredients going into the ending of easing pot. And if that doesn't stand in good stead when the BOJ look to decide on policy, that could be a reason why they hold back on ending easing. We know that inflation has been coming down as well, and there's a lot of focus on these wage hikes. So there's three big pillars at play here: inflation, the economy, and wages. And at the moment, two of them are looking a bit wobbly. However, we did get a bit of good news on the trade front. Trade deficit improved somewhat, as you can see there, but the big story was in exports, which rose a healthy looking 11.9%. Imports came down more than expected, which is no bad thing. But yeah, at least on the trade front, you see the adjusted trade balance looking a bit better there. Now, these numbers can flap around quite a bit, as you can see there. It was up 69 billion. Last month, it's now down over $1 trillion. So it's a bit wobbly, but that's why we look at these numbers, just to see what the activity is looking like. So on that basis, it's looking a-okay-ish, shall we say. Now, over to the wages, and we're starting to get some of these automakers, producers filtering through their wage talks, how things are going over there. Mazda has fully accepted the union demands for wage hikes, said to be around 6.8%. That's a decent number. Honda has apparently agreed 5.6% wage hike plus a bonus of 7.1 months pay, annual pay. So they're good numbers again there. We can't take that as a benchmark for what will be the national number, if you like, which was that 3.85% or whatever it was last year. But if they're all coming out in the 5s and 6s, then it's going to be up there, and that's going to be at the bullish end of expectations for wages. Toyota have pushed their talks that they started this week over to the 28th of Feb, so they haven't answered the first pay demand from the union. Apparently they're going to talk about that next week. But they've also said apparently that they're going to pay Japanese suppliers more to finance better working conditions. They may also pay overseas suppliers at a later time. So they are going to be spending. But again, Toyota has been wrapped up in this problem over there. Some dodgy goings on, and they've had to shut down plants and whatever. So that's probably part and parcel of that. So yeah, three things we got there. Economy not doing too well in certain aspects. The government a bit more pessimistic, but wages in the auto sector looking like they're coming in pretty strong. What do you make of all that lot so far, Kay?
You're taking all as one package. I don't think it's going to change the way as planned to at least go to zero. As things stand right now, okay? Those people are constantly sending us back to like mid-March as well. I know there's a second round at Toyota the 28th of Feb, but then the other one, results are expecting around the 13th of March. That looks that it's going to be the date to really watch, and is going to move the yen. Yeah, the consumer has always been a bit problematic over there, because as soon as they're done their little bits and pieces of spending, it's not been a great area, because either inflation goes up and they stop spending and try to save, or inflation comes down, but then they're waiting for the next one. They spend a little bit, but they still want to keep their saving, or they go and join the Mrs. Watanabe and Junior Legion. Yeah. Look, I still think it's not going to change the first leg, but then what's happening next? And we've seen this Tenkan move up and down quite a bit as well. And I've been talking about this big manufacturing thing, which They depend. This is I think the is that more like the consumer driven one, or I don't know exactly which one you're looking at, but anyway, the consumer driven one is not doing great. The other one, they really will depend on machinery orders and stuff, and that bit is extremely volatile. You can have months of very big orders where everything is all rosy, but then you're going to have periods where they don't sell any of those big machineries. So that's always a bit of an issue over there. And then the Japanese downgrading their economic view is a bit strange. Like literally, what, a month and a half, 2 months after they upgraded it. Yeah, I on that front, I think the overall package is really going to, and the government, unfortunately, themselves are pushing some decisions made by the Bank of Japan to just purely rely on those wages, which is a bit of a shame. On the other hand, though, we have to also not forget that the Japanese government is investing a lot of money in trying to launch a local project. There's all these talks going on about the big Hokkaido project for chips and stuff, and that apparently sees a lot of interest. So that may be a bit of a bright light at the end of the tunnel, perhaps, in all of this. But yeah, I still, my base case is still, it hasn't changed with those numbers, because we saw trade balance is still negative, exports are good, imports crap, really crap. But on the other hand, the latest current account, which has been coming down massively over the past years, has stabilized, I think. So yeah, as I'm pleased to say, ball back in the middle, and let the play start again.
Yeah, I think so. And as you say, I think as we sit here now, the BOJ, they've still got their window open. It depends on whether they want to go or wait for the exact perfect conditions. I think they need to. I think they got it in the back of their mind. They need to start changing it, as you say, even if it's taking rate back to zero. That gets them out of negative rate territory. Even if they don't build on that strongly thereafter. I think we all agree they're not going to be super hawkish from that point on. So it's just going to be how the market takes it. We know that the market's piling into Japan at the moment. Stock market up near all-time highs. Hedge funds and investors getting all bullish over Japan. So there's a lot to unwind if it all goes wrong. And I think we've got to keep that risk in the back of our minds. I'm certainly going to be having a look at some upside calls with the dollar yen. I can tell you that. I know you already said you're in some high side stuff, mate. But yeah, I think I might be having a little dabble myself just in case it doesn't go right. Right, coming over to Australia, wage price index on the quarter coming in as expected, but year on year much stickier than the RBA would like. So that's going to probably keep them from putting too much cut language into future policy talks and meetings going on there. So that's not looking too good as well. New Zealand as well, some PPI data from there, again, quarterly data. I hate this quarterly stuff, but it is what it is. Again, on the quarter coming in more than expected, so stickiness there. Same for output prices. So again, it keeps the heat on the central bank in terms of inflation. So few in the market thinking that they're going to be forced to hike again, the RBNZ, and these sort of numbers adds to that. We'll have to wait and see what they decide to do. Over in Sweden, Riksbank's been very busy squawking around the last few days. Riksbank's Bremen says inflation decline is continuing, but the risk of setbacks remains. It says we cannot take a smooth return to low and stable inflation for granted. Therefore, we need to be patient with our monetary policy. Borrowing numbers in the UK, public sector borrowing funny numbers. These January numbers can be a bit skewy. For example, this one here, the PSNCR, which is the sort of effective amount that the government may need to borrow to cover its costs. So this is like a constantly moving number. So back in December, they would be looking to need to borrow 14 billion, and now that's gone to a negative. So they're not going to be sending out checks to us, okay? But it's better numbers on the face of it. But it is a screwy month. It's the end of a tax period. Lots of tax
just have a look
going on. So
the rolling year numbers. Every January, it's the same thing. It's a completely is the differential with the whole year. And if you look at it, every January, all those spikes lower down are January.
Yeah, as I say, it's a purely seasonal thing. There's a lot of tax receipts that come in, end of year filing for self-assessments and that sort of thing. So yeah, it can just be a funky period. But,
and all those articles about UK having now 23 billion sterling to spend. Let's see what the number shows in March, shall we?
Yeah, exactly. Well, even next month they'll probably bounce back from that.
Exactly.
But yeah, we shall see. Right. Bailey, they continue to waffle while we were doing the show yesterday, so I'll just pick out the comments that we didn't get. Saying that markets expect rate cuts this year. They says we do not endorse the market curve, but it's not unreasonable for the market to think that. So basically saying that the market's expecting cuts. The bank don't accept the amount of cuts that are expected, but it's not unreasonable to think that cuts may come. So how's that for sitting on the fence? BOE Green says there is a risk of cutting too quickly and then having to reverse. So that's cutting and reversing back to hikes. BOE's Broadbent was a bit more hawkish, says, I don't agree that all the evidence points in the direction of rate cuts. Wage growth and services inflation are twice the rate consistent with sustainable inflation, but says GDP is likely growing again. Archdove Dingra the Dove, that's what I have to call her from now on, says downside risks to the economy are substantial and tight monetary policy will add to that. So explaining why she voted for cuts at the last meeting. Reuters have run a poll among the so-called knowledgeable economists, and they all point to the BOE cutting the rate to 4.75 in Q3. So rate cut starting in Q3 now, which is a little bit later than previously advertised by those lot. Over in Canada, we had the CPI data yesterday. Good news for the BOC. Headline inflation printing back down to a 2 handle, 2.9%, so falling much more than expected. All the other measures, core measures and this and that measures coming in softer as well by a good degree, as you can see there. So that should get Macklem talking from the neutral to maybe a touch on the dovish side, or at least talking more about cuts than hikes, at least, or keeping policy for higher for longer, that sort of thing. He can switch around by the data. He's a bit of a flip-flopper. But good news there for the BOC. PM Trudeau was out with some comments after that, saying that he's optimistic the BOC will start bringing down rates this year. Philly Fed services data, which, as I always say, is never on the main calendars, came in at minus 8.8 versus minus 3.7, so a worse number there. Reuters had a poll out for the Fed as well, and the majority of people saw rate cuts coming in June, but there were risks that skewed it towards a later move. And something I was half mentioning tongue-in-cheek about rate expectations, and if inflation numbers keep going as they were in the last prints, we might start to see some in the market pricing hikes, let alone cuts. Bloomberg are out with a piece saying that markets are starting to speculate if the next Fed move is going to be up, not down, saying that interest rate options reveal some small hedging for Fed hikes. So there are a few in the market who are potentially getting a bit more hawkish about things. These things obviously flip around, but that was quite funny hearing that after mentioning such comments myself. Geopolitics, China and France have agreed to enhance cooperation on agriculture and AI. So not everyone is turning their back on China right now. That's all I've got. Anything crossing your screen, Kay?
I don't think so. I think we talked about most of it. Just before the show started, China again came up with a headline saying that they tightened the grip on the stocks with a net sale ban at the open close. That's another one to try to avoid Chinese equity markets to go much lower, because you can't be net short at the end of the day. Yeah, they're just trying everything. Whether it's going to attract investors, usually more rules, investors don't like it, right? They are more for less rules, but decent support. So that's, in my opinion, not going to attract more investors. No, for the rest, I think we've covered most of what we saw overnight, and yeah, we can start the day waiting for NVIDIA, because there's really not much on the docket today, right? We've got, for those who are watching the emerging markets, could be a bit interesting, because we've got the Mexican retail sales coming up. We've got actually 2 days of interesting Mexican stuff, and I'm saying that because tomorrow we have they produce those half-month CPI numbers as well, and they've got the Q4 GDP, economic activity, coming out tomorrow as well. And I'm saying that because dollar MEX again held at 1700, 17.00 level. It's really making a very solid level of it, and of course, who says solid level also says that if ever this would go for a bit of a walk to the downside, it could be that some people need to get out of position. So watch that 1700, 1697 level on the dollar mix.
Yep, thank you very much, mate. I'll let you look at that chart when we get into it. Yeah, we have had a bit more data out just now. Where is it? There we go. Industrial trends coming in less sucky than it did last month. So that's the manufacturing side of things. A very pessimistic number. These ones tend to be, but one could call that a bit of an improvement anyway. Right, let's get stuck into prices. And first of all, a thank you to Nashi, who popped up yesterday to remind us of the Rio Tinto dividend stuff, and also James in our chat room. Embellishing on that as well. That was likely behind a lot of these moves that we saw, particularly in the Aussie. Let's come to a shorter time frame, shall we? Where we see a decent bid in that. This was the FX dealings going through for the dividend payments. We had the Rio Tinto earnings report out, which was pretty good as well. But we'd seen, particularly in commodity currencies, had been well bid up all through yesterday. And there was a decent fix as well, which saw pairs like cable suddenly moving up pretty sharply. Same for the euro, ticking up as well, getting up to the zone. It hasn't lasted. So it shows you that it was likely that flows like that were pushing through. One I've been looking at and I've been tapping into shorts is this Aussie yen, which has been knocking up against this strong support. So I've been slicing and dicing on that one. That's looking okay. Seeing a bit of a bid again today, Kay, in these commodity currencies and the like. Is there going to be a bit of spillover going through again today, perhaps, or last minute stuff to do with that Rio Tinto stuff, or are we just trading in something else now?
I think the Rio stuff, we could have seen a bit on the Aussie fix this morning, perhaps, but no, the big one yesterday was the cable into 4 p.m. and that was clearly a fixing run, and now that's I don't suppose that there is more to do. Rio declared their what is it, dividends? So I don't think there's more to do today. So that was it. I don't know. I've seen the both those antipodians doing pretty well. Perhaps a bit of commodities in there as well. They are doing okay, and especially the Kiwi. I also think in the Kiwi thing is that we've seen those data and banks repricing the RBNZ and or not fighting against it. So that may be something behind the Kiwi. And also, you know, I guess just carry trades. Kiwi is a 5.5% currency. And if you look at stuff like Kiwi yen, Kiwi Swiss perhaps as well, in some form, it's kind of an attractive currency if you think that the rest is about to cut or at least not going to raise anymore. It does look like an attractive currency. I also already warned against the fact that there is less liquidity. So putting on the positions is going to make this quite big. But be careful when people need to get out of positions because it will equally go faster to the downside. But for now, at least, the Kiwi dollar is through that 61.40-65 level, and it's holding. The Aussie, somewhere we saw those bit of stubborn numbers, the RBA minutes. Still fighting against expectations for lower rates. We saw also the wage index overnight on the Aussie coming in stubbornly high. So all of that is of course watched now. Now every country, it's all about wages now, or at least a part of the market is or a part of what drives the market is hanging on to what wages are doing. So that is likely also one of the reasons why the Aussie is remaining big, you know.
Yeah, exactly. And in half the world, well, most of the world, they want wages to start coming down or easing, and in Japan, they want them to start going up. So Japan's always seems to be doing the opposite of what everyone else is doing. But yeah, there does feel like there does look to be a heavy commodity influence in that. I just showed copper a moment ago, that's staying bid. Gold as well, staying bid. So that's, as I said, going to keep things in the commodity space looking pretty good. Ali wants to look at nat gas. Let's have a quick butcher's there. We've had a little bit of a bounce off. We had a bounce off that 150 there. So we looked at that the other day, I think, and let's go into a wider chart. I think that was where we had all the support down around that area. So it's looking, technically, it's looking like a good bounce for now. So good luck with that. You say you're going to run that for quite some time. Check your rollover costs, because obviously if this is based off a future, there will be rollover stuff to take account of whenever they end, whatever monthlies, whether it's 1 month or 3 month rollovers that you get there. So just make sure you know that you're not going to get hit by any dodgy spreads or costs when those roll over. But if you're bottom pick where you know where your risk is. If you do get a break here, then I don't know, the bottom's the limit, as they say. 130, 40 maybe, but you're getting into uncharted territory down there. So be a bit careful. Usually when you get breaks of big levels like this, it can go on for a bit, but good luck for that one, Ali. I was looking at gold. Where's gold gone? Here we are. So gold back to the middle ground. It had its little mooch under 2,000. Now we're back above, and now we're back slap bang pretty much in the middle of the recent ranges. So looks like once again we've had this move out, but geopolitical risks and everything else going on, keeping this well bid. China coming back to the market, no doubt will have the hoover on. So again, we're probably going to be seeing a bit of range play here. Can we get back up to these highs, top of the range, 2075, 80s? Or are we just going to waffle around, maybe getting up to the 50s, 60s again? But here we're pretty much bang in the middle, as said. Right, what else has been going on? So let's have a look at dollar yen quickly. Again, not doing too much, waffling around this 150 line, not really making a decision either way. As I said, I am going to start to, I think, look at some top side option coverage if it's looking pretty cheap, just in case the boxes don't get ticked for the BOJ. If they don't, this one's probably going to fly. But the more we go into it, and if we get these wage numbers, the market will trade that into their expectations for the BOJ. So if we get decent wage numbers, but we're not seeing yen strengthen significantly, it might be a case of buy rumor, sell fact appearing in here. So I think, well, I've said it a couple of weeks ago, I think, Kate, that the longer this goes on, the harder I see any significant downside for yen pairs, because it's all getting factored in. You still have that same opinion? I mean, I can't see us getting down to 140 unless they say they're going to hike 10 pips every meeting after they end easing.
To get to 140, I think if they do 10 BPs, it's probably not going to be enough. They should be doing a couple of 25s, but then it's Japan who is expecting Japan to do 25. That would actually put a serious bid under the yen if they really do it, because there's undeniably a lot of money turning around in Japan, whether it is from Japan, inside Japan, and with the Japanese whales, even the retail traders over there is a huge community, and then obviously the external interest into Japan, which has ramped up dramatically since Ueda came on. The only thing we have to look at is the Nikkei and the topics, right? So that tells us enough. I've been saying it since Ueda came on, and it's been such a slow grind. And look where we are. We had pre-Ueda, we had those interventions. When Ueda came on, we had all that hopium, and here we are at 150. We are not trading at 145, or let alone 140 or in the 130s. It's going to have to be a serious change, and I've been saying it all along. I mean, the longer it lasts, the more it's difficult to justify staying long yen, because it's going to cost you an arm and a leg, and that is exactly what's been going on. Yeah, there will be setbacks, and really, I think the wage dates, they are going to be movers, and effectively, if and when Bank of Japan will raise their rates to even to zero, there's going to be a mechanical somewhere change in the books, and that should at least have a mechanical impact on the yen. Yen should mechanically strengthen. If it doesn't strengthen, then I really don't know where it's going to go, but it's going to get ugly, and then that will force really MOF into massive interventions, or the yen is going to implode, which is just my long-term view.
That'd be funny. They'll have to swap QE for intervening, so they still won't be saving any money. But yeah, I think a lot of this move here into that part of 2023 was obviously on Fed expectations, but I think also in here is a big amount of BOJ expectations. So the fact we're back up here, yeah, and I've been saying it too. It is feeling like it's going to be a buy the rumor, sell the fact type move. So yeah, we'll get a confirmation if they finally decide to end easing. We're going to get a confirmation move. Maybe that lasts for a few days once we know the details, how strong or how weak they're going to be. Yeah, as you say, people are adjusting the books, and then it's going to be after that we need to watch.
And of course, a pair, any pair, whether it be dollar yen or rosy yen or euro yen or whatever, is as always the other side as well. I mean, imagine that something goes, all of a sudden data start to turn around in the US, then it's going to be a dollar-driven thing, right? But
exactly,
we are here talking about the impact on the yen, so you can replace dollar yen by euro yen or sterling yen or whatever. It's where the yen drivers will come from that are going to be important, I think, for most of the pairs going into those wage talks and the Bank of Japan and the end of the fiscal year.
Yeah, and so we'll just continue to watch the data for this one, see what it does thereafter. Kay, you want to have a little look-see?
I mean, today it's gonna be a quiet one. Well, there's stuff on the move. There is stuff on the move, and as we've seen on the Aussie, of course, we moved through that 25-40 zone, but we still have to get into where I think is the next decision zone, which is going to come in at 66. I know there's a bit too many lines here. I'm going to clean it up. But the next is still going to be a 66. And yeah, we have reversed this. As I said, this is really what I thought would happen on most of the pairs, the dollar getting back from what it lost in the end of the year. And now we've clawed back a lot, and now we are getting into that zone, perhaps where again FX options don't tell us that there should be huge moves, but we're coming into perhaps a zone of what next, and that what next little thing can go paired if the dollar yields are not pushing a lot higher. By the way, we still have quite a bit of issuances this week, treasury issuances, so keep an eye on what's happening there. We've got the Fed minutes as well, but really, apart from the algo blip, unless they show us something that we don't know yet, which is remains to be seen, because they've all been talking already. So I really think it's going to be a non-event. Everybody will wait for Nvidia today. So we are going to lightly perhaps hang around for a while. Kiwi just looks to me like a bit more. It's got also 1% more on the rates, right? So it looks to me like that could possibly push back into the 62 somewhere. Around here, perhaps 62, yeah, around 62.5. We need to get through the 50% of what's happened in since the start of the year. 62.5, 62 the figure. So figure 5, if that goes through, perhaps 62.5, and then see what happens there, because the Kiwi, just because of the interest rates also, and the positiveness and the expectations of the market right now for the Kiwi, and then you transpose that in whatever Kiwi pair you like. Whether I indeed, Gav was talking about Kiwi Cat, of course, Kiwi Cat, Kiwi being beat. Cat got a knock on the head on the back of those lower CPI data. Obviously, Kiwi Cat had a little bit of a moonshot yesterday and into today. I was going to show something else and I forgot about it. Oh yeah, you were asking about the cable brand, as usual. Well, look at what happened. Again, I'm not a fan of moving averages, as people know, but we did. This is the 4 o'clock London fixing spike. It stopped and then came back. So this is I guess already around 40 and then around 60, 65. cable should see a bit of resistance, in my opinion. If it would go back through yesterday's high and not driven, I'm going to precise it, not driven by a fixing, maybe that the sterling is going to go back into the 127s. In the meantime, it's just we are just in a range, man. We're just in a range. Like we are in a sort of triangle here. Go back through 125, 80, 90. We can have a look back at those lows again, perhaps. But that's as far as I think right now we can go until data tell us what to do. And the data may come tomorrow. Tomorrow is PMI day. Okay, tomorrow we have a PMI day. So for the markets, for those who are looking at moves, and in the meantime, if you want to be patient until those PMIs. All right. So I think a bit of range trading here. Euro sterling. Yesterday we saw that because of that sterling demand. Yeah, we saw that move lower here also into the London 4 p.m. fix. I was hoping for a bit of a move here then into those 30s. I've got smalls, I mean, around here. I was hoping for a move here to really add, but didn't get it because I think that for now at least, there's perhaps a bit of a better chance for a bit of a give back after yesterday's BOE. They did say that they didn't need CPI to really hit their 2% target before cutting rates. I know, I mean, they went to all sides of the pendulum, but it does appear that since we rejected here and then found bids here, that euro sterling may perhaps try and give us a little push up to 86 at one stage. We will see. And really, there's one that I'm keeping an eye on now, and this is here, this Euro Stocky. Yeah, we are through this this support line here, but we're holding the 23.6 for now. I'm watching this with a little bit of interest because I'm also watching with an eye what's happening on the equity markets, and Stocky tends to be a bit of a risk currency as well. I thought on balance, the Riksbank was a little less hawkish, even perhaps tilting a little bit towards the dovish side. And we are back into zones that we visited already last time as well. We were a little bit undecided here. Here was a bottom, here was a bottom. We went smalls below, but we are holding around those 11, 18 zones, which is a 38.2 of the rally that we saw here. Okay, so that's one that I'm keeping an eye on right now as well. And with that, Ryan, I'm going to give it back to you today.
Thank you very much. Okay, just coming back to Ali, looking to on this nat gas stuff, trying just to understand the fundamentals. Yeah, you've got to if you're going to look at the fundamentals, you obviously there's main things to look at. You know, make it easy for yourself. Look at what's happening in the world with shipping of natural gas. You know, we've had these problems with transmitting through the Red Sea, so that's potentially going to add a premium onto gas supplies. But look at other gas markets as well. You know, Dutch gas, nat gas is obviously the US market. Dutch gas is the European market. So they can largely go in the same way. It's a bit like WTI and Brent. The difference between them. So yeah, look, counter trading is fine. If you're looking at nat gas, let me just share my screen quickly so we can look at. So first and foremost, you've got a level to lean on. We know that down in the 150s should be doing it. We know down here there's potential old support. So that gives you something on the technical front. The fundamental front, that's where the interesting work comes in, looking into what moves nat gas markets. So if you want to trade this for the long term, you've got a good start. You need to know what's going to get it getting back up, weather being one thing, production, demand, that sort of thing, all factors into these things. So yeah, weather as well. Gavin has said, you know, we had a bit of a winter hit in nat gas or in the US late December, but you know, things have warmed up a touch since then. So as far as I'm aware anyway. So that all factors into these things. So you put all these together, and that determines how you get on with a long-term trade. Right, quickly, I want your guys and girls input on this one. We got this Nvidia stuff coming in. It's going to be a popcorn watch unless you're actually trading stocks. I'll be watching it for its impact on the S&P, which could go any bloody where. But I'll be looking to see if we get up to those highs and whether we hold them in the S&P. But I want your interaction. What do you reckon? Are we going to be above 700 or below 600 after the bell and after we get their announcement? So put your guesses in the comments quickly now, and I'll have a little jot down, and then we'll see who's right and who's wrong. Oh, Gordon, price to 1,000. What, today or over the period? Okay, so it's above 6, above 7 or below 6, so under. Right, below Lucas as well. Okay, right, I'll note all these down, and we can see who's right and who's wrong tomorrow. So keep those coming in. I'll leave the webinar open for a little bit after we finish, just to know who's doing what. And on that note, have a great day, everybody. Thank you very much for joining us here on the Flow Show. Thank you very much to K-Man, as always, for your input. All of those guesses that keep coming in. So I won't close it, but I will say goodbye for now, and I'll just jot all these down. Have a great day, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.